Maverick traders. Welcome out to your market roundup for May 31st, 2022. Corey here with you. Quick reminder, let's make sure we follow our trading plans and let's get to it. So, as has been the case, markets are certainly giving some pitches to swing at in a variety of different sectors. I have a personal opinion and thesis that money's going to start rotating out of energy, and today certainly kind of confirmed that to me. So we'll talk about that a little bit more as we go. Kind of a little bit of a stumble this week, not massive, but markets down about 0.5% across the board. Gold tumbled, oil up a little bit. You can see advancers, decliners, about 60-40. More stocks going down than up, and still in a bearish trend in terms of about 70% of stocks below their 50-period moving average. Amazon was one of the lone bright spots you can see here in the heat map, and a lot of red out there. Now, markets rebounded last week. I was bullish. I talked about, look, if you look at all the bad news in the market to hang in there, you had Target imploding and Walmart imploding and Snapchat and this and that. And it was just, I mean, the market was getting bombarded, and yet we had bottomed out. And you can see the wicks, and we talked about it. That wick right there was 1 week ago. Now, I can't say that I thought we would for sure rally, 6% or whatever, but look, the biggest rallies are always in bear markets. We always talk about this. Volatility happens in bear market environments. That's where you are a coiled spring. That's where energy is highest. That's where there's a lot of emotion. In an upward moving market, there's more of a sense of complacency, and it's kind of a quiet grind. In a downward moving market, oh, there's emotion everywhere. And so this thing was kind of spring loaded, a lot of shorts, a lot of pessimism, a lot of bad news, and the market was shaking it off, and sure enough, nice, sharp, steep rally. Now that we've rallied back, well, where does that put us? Actually in better footing. This is above the 20-period moving average. You can't call it an uptrend by any means, but we're not going down anymore. And I think the next trade, in my opinion, this is kind of my thesis, is I'm expecting a pullback. And on one of these days, you might be down 2, 3, 4% on the day, something kind of ugly-ish. And everybody will kind of come out and say, oh, here we go again. This is the resumption of the downturn. You got to get super bearish and so on. And it's probably going to be a buy. We'll know it when we see it, and I can't guarantee that. I might change my mind. But in all likelihood, I think that next little scare that the market drops, it's going to establish a higher low and make another wave of buying. So I don't think this thing is done yet. It's been a nice rally off the lows, but I think there's more to come. If you look at the NASDAQ, again, I think we pull back, but then we kind of spring higher one more time. Those 50-period moving averages, somewhere up towards there seems likely. And I think, it's going to be a little bit of a choppy environment. Like, I think the sell-off comes, and that's the good buy. That's the one where everyone says, oh, here we go. We're going to go break the lows, and it's probably going to be on bad news and so on. And then next thing you know, the market's kind of grinding its way back up and takes out those levels and starts to make an even higher high than this one. That's the way I see it. So energy. I'm not going to rehash everything. We did a class today live at Maverick talking about the energy sector, went through this whole kind of history of the demand destruction that happened in 2020. Nobody was flying and traveling, and then how oil prices went negative and how that knocked a lot of, production and all these things offline, and a lot of people got laid off or whatever, left the oil energy sector never to return. These are all interrelated to what's happening today. And the companies that are highly leveraged are really seeing the reward. So energy's been a great trade, and we've hit on that over and over again. I just took profits on my energy longs on the trading side. I pretty much closed everything, closed Oxy, closed the trades that I had going for nice big profits. But I think that trade is somewhat done. So watch that oil class. It's available at maverickTrading.com, or you could probably go on YouTube, type in Maverick Trading oil price spike, something like that. You'll probably find it. But anyway, go in and watch that if you want more info on my kind of thesis on energy and why I think we start to pull back. Which, by the way, go look at those charts, and they started with a gap up, and they pretty much finish on their lows, big. Bearish engulfing or dark cloud cover type of candlesticks, pretty ugly reversals off the highs, uh, quite a bit of red there in that sector. So strength, it's in financials. I think that's a good rotation. I think financials are probably a beneficiary here in the short term and should see some follow through buying. So I'm looking at that group overall. So on the dip, my thesis is when everyone gets nervous on this next little dip, we'll have another. That's the buy and the next wave to the upside. Um, there's not much else to add. That's kind of the next pitch that I want to swing at. So let's talk shop about potential buys, neutral sells. I've got some new candidates here and some old ones that still fit the bill. So let's go through them together. Here's Fedex. Now, I ended up making a little money on Fedex in the advance. And the next trade, I think, is again, you'll probably get a pullback with the market, but I would look at FedEx as being a buying opportunity. This thing has been ugly for quite some time. You can see much, much higher prices and has been hit over and over again. It bottomed before the market. It didn't make a new low. It's got all these characteristics. We're already at a new high above the prior highs and advancing. I think you'll get a little pullback, and it's just buy the dip mode. Buy the dips in FedEx. That's the way I see it. JP Morgan, very similar kind of concept of I'm just going to be looking to be a buyer. If it consolidates and creates a high base, if it pulls back, it's now clear. Think about the relative strength. It's above its 20, it's above its 50. Not too many stocks, not too many sectors can say those two things together. About 30% of stocks can say they're above their 50 period moving average, and the vast majority of them are energy, which I no longer personally am interested in buying. So where else can we go? Well, something like JPM. WDC, we highlighted this one last week, and it's working, and I still think there's more room for it to advance. I think we kind of broke out of this little triangle pattern, and there should be this probably about the pullback, and it should keep working its way up from there. So those are some bullish charts in what's been a bad market environment, and for the most case, I kind of want to probably trigger into most anything with some patience and with a little bit of a market downturn would be ideal. On the bearish side, I highlighted Pepsi and I said what I was looking for was a bearish candle under this moving average. And if it doesn't happen, we talked about this last week, if it just kind of goes through with green, with bullish candlesticks, we don't trade it. Now we're in a little bit of a tricky environment because it broke above, but now it's spiked violently back below. And I think it's the down move that I trust more than the up move. And I think this is a false breakout. And from false moves come fast moves. I think Pepsi works its way back to the lows. And that's a pretty significant decline for a low beta, slow moving stock like Pepsi. So from 167, I think we're headed down towards 160. But just be aware, this type of stock moves very choppily. So even if it's going down, it'll feel a little bit like watching paint dry sometimes, and a lot of just, kind of choppiness. Look at all these candlesticks. They just get bunched up. Even as it's working its way lower, it'll do so methodically, much more than aggressively for the most part. Deer, here I think we've broken and kind of come up to fill the gap. And I suspect, again, another wave. Now, I don't think it's probably even so much as retesting the low that would be my target. I think I'd go kind of a Fibonacci type of level. From 357, think we pull back, and 340 is a pretty good target. And by the way, 17 points is not a bad target for this thing. We should not break above the 50-period moving average, and I think it's just a quick little decline here back towards about 340. And I wouldn't overstay the welcome. I don't highlight. I probably trade a little bit longer time frame than anybody in our Maverick team. I put on a lot of multi-month type of trading strategies and things, but this is one that for me would be a quick trade. A move back towards 340, quick and sharp, and taking profits on that move. LNG, I had this on the highlight, and I really could have triggered in here. I didn't. Instead, I have waited, and I don't know that there's any benefit to have waited. It'd probably be about the same price today as it was entry there. So I didn't really save anything, but I'm not in yet. This is an energy short, and I like it because it's underperformed, and I suspect I will be in this at some point tomorrow. So I haven't entered yet, but I still think this is a bearish candidate. A nice bearish engulfing formation today, any little choppiness tomorrow, and I think I'll trigger into some form of a trade. And I think not only do we go back to the lows, I would target a move below the lows, kind of do a little bit measured move approach. And I think we could have a substantial downside move. So one of the things I was looking at today, I wish there was a little more liquidity, a little bit tighter bid-ask spreads. I was looking at targeted butterflies, some big butterfly down here that would have a huge payoff as it falls and have this big profit potential, and give it some time and give it some room to run and just sit on that trade and have that profit build if it makes us a big move lower. You can watch our class on targeted butterflies for more on that concept, but the only thing that I don't like, I wish it was a little bit more liquid, a little bit tighter bid-ask spreads. Butterflies are a multi-leg strategy, so you really want high volume, strong liquidity, a lot of volume and open interest and things, and it's a little bit borderline for that. Inflation has likely peaked. I've been saying that for some time now. Now, again, we're talking about backing up from 8% back towards 6 and 5 and 4. What does that do for the markets? Well, a lot of worst case scenarios were getting priced in a little bit. And so now, as you're seeing, inflation has in fact peaked, and people are realizing that. Now we're getting the relief. I don't think the relief sustains. I still suspect that ultimately the market is going to go lower long term, but everything in due time and due season, right? We probably rally first, and then we get another decline, another deterioration and such. Energy stocks likely to move into a deeper pullback in my view. We've got payrolls. Whoops, that should say Friday. Every first Friday of the month is non-farm payrolls. And then some earnings, CrowdStrike and GameStop, which had another big jump, and Lululemon and PetroChina and so forth. There's CRM, Salesforce reported after the bell today. So there's still some earnings reports trickling in. Payrolls on Friday. People always watch those jobs numbers to get a sense of what the Fed's going to do. They want to keep full employment, and there certainly are some sectors and some industries that are in layoff mode. So we'll see. Hope you've enjoyed the market roundup. Have a fantastic week, and we will see you next time. Goodbye, everyone.